Well, we had a couple overnight export sales announced this morning by USDA, and it was a little bit interesting in the makeup of those sales this time. We had some soybeans, and we also had some soybean meal this morning. The soybean meal went to the Philippines. It was 135,000 tons. We had 120,700 tons that went to unknown destinations on the soybean side there. So we keep up that trend there. But is it helping the markets or not? Early on, when we opened the market day report, we saw pressure in the grain markets, and now we're starting to come off the lows of the day. So December corn, with these quotes provided by bar chart, are showing a last trade of 418 per bushel. That is now 1 1/4 lower, and we had been as much as about, we'll call it 6 or 7 lower there at one point. Let's take a look at the soybean trade, and now, even with the export sales, we had sold off early in the day, got as low as 1078 in that November contract, and now we have bounced back up to 1085 1/4, and we're back on the plus side again. So it just keeps going back and forth here. It's been doing that since early last night. Penny and a half higher on November at 1085 1/4. The January contract now up a penny at 1082. Remember, November goes into delivery the end of this week. And let's take a look at our wheat market. We'll start in Chicago, where we have December now 11 1/4 lower at 621 1/2, but that has bounced over a nickel off of our earlier low about a half an hour ago. In the hard red winter wheat for Kansas City wheat, December is down 16 1/2 at 553 1/4. Same story there, bounced about a nickel off of its low last half hour. In the spring wheat market, we have December down 7 3/4 now at 569 3/4. And that cotton market, with the approaching hurricane once again, December cotton up 69 points at 71.98 cents per pound. We bring in Chris Swift of Swift Trading Incorporated in Nashville. Lots going on that could affect the markets today. We have the end of the month. We have potential profit taking. We have overheated technicals. We have an election. We have weather. Oh, my gosh. How do you sort it all out, Chris?
Well, you probably need to hang up the phone and call somebody else that really knows about it. So I tell you, there's a lot of things to have to watch out for. But, you know, we're pretty much wrapping up harvest. The next couple of weeks, we'll wrap up anything that we have left in there. We've seen really good demand coming here as we have this new crop being harvested. So I look for some of those things to settle down. But as you mentioned, the elections are going to be a week from today, next Tuesday. And I just can't imagine what all will transpire when those elections come out and how we see some of the outside markets react and then how that imposes on some of our commodity markets.
And you spoke about the outside markets. Let's take a look at what the Dow is doing this morning. Boy, we had a big sell-off early on. We have come off of that a little bit now. We have December Dow futures. They were down about 400 points. Now they're down, still sharply, but down 319 now. At 27,870. That's noteworthy, mainly because it's under 28,000 right now. The U.S. dollar index, last time we checked, it was up a couple of hundred points, and right now we have the December futures up 250 points. And it's back up above 93 cents at 93.015. And we were watching the crude oil market earlier today as well. We have December West Texas Intermediate crude now $1.26 lower at 38.59 per barrel. We'll come back and talk more with Chris Swift about our livestock open when we come back. After we closed up the markets on Friday, don't forget we had that cattle on feed report that came out. And in case you missed it, here's those numbers again. And for the on-feed number, it came out at 104%, just slightly above the average trade guess. Placements at 106% of a year ago. That was well above the average guess of 102.5. And the marketing's number also at 106%, and that was about right on the money with what the trade was looking for. So on the surface, that looks like a bearish report, right? Well, go figure. It's 2020. Here we go with a look at our live cattle trade, and here on the big board in Chicago with these quotes provided by bar chart, we have, we have December. It was higher. Now we have it at 103.40. So it is starting to sag a little bit now. It's down 17 cents is all. February down 17 at 106.45. There was a lot of concern about the feeders on the open this morning. They were higher across the board. They're showing a little bit of slippage here. November up 37 at 130.02. But they had been about 70 cents higher than that. January now up 50 cents on the day. Lean hog market, well, we have the lean hogs currently on December down $1.45 at 65.57 per hundred. That's about $1.20 off of its earlier high of the morning, getting much, much closer to our low of the day. That February contract down $1.02. So let's go back to Chris Swift. Looks like everything was baked in the cake on the cattle on feed report.
It does look like that. I think everybody has some pretty good ideas that we were at least going to have heavy placements. I think the marketing's be as high as what they were may have surprised a few people, but the placement number, and seeming like with the production cycles continually being disrupted starting back April, May of this year, and then now the drought is starting to impact some of those production cycles. So I think we got a lot more volatility, more so than price direction over the next week or two in the cattle market.
I noticed where on the cash hog trade, the carcass basis hogs were lower on Friday. Is that going to be weighing on the futures trade here this week?
You know, I kind of think so. The futures were down sharply at the end of the close last week, and we've just not noticed that index going up in leaps and bounds the way it was when it was in the low 60s up into the low 70s, and now here up in the upper 70s, reaching up towards 80, it's finding some resistance. So I think the futures market, looking at that, not seeing that index rise as sharply as what it has been, taking a little precautionary sidestep here.
Quite a bit of discount on the nearbys versus the summer months, that's for sure. About $13 all the way out to June. Okay, thank you, Chris, for helping us navigate the waters this morning. Chris Swift, Swift Trading Incorporated, based in Nashville. Christina, I'll turn it back to you.
Thank you so much, Marlin.